Hi there, and welcome to the third episode of CryptoTime. My name's Antonio Shillingford, and I'm here with
Stephen Ierotheou.
How are you doing today?
Very well, mate. How are you?
Yeah, can't complain. Right, during this episode, we're actually going to change the flow slightly. As opposed to answering questions from the public and also orchestrating some of our own questions that we think that people just wanted answers to, we believe it'll be a lot more beneficial just to do news segments. So we're going to sum up a lot of the information that we've read through during the week and give our opinions on it. Now, the first piece of news that we're actually going through is Bitmain, because Bitmain are preparing to launch their new chip, which is a very questionable time because we know the company in general is going through a lot of financial issues. They're slimming down their operation. They've shut down their Hong Kong office. They have also shut down their Texas office, which I know a lot of the people in the US were actually excited about because that was meant to be the biggest mining farm in the US. So they've lost those touting rights. And with Bitmain launching this new particular chip, it's meant to be 28% more power efficient. So it just draws on less electricity, quite simply. And we know that with mining, the biggest draw is the electricity costs. Now, the question is, will this chip actually even work in the first place? And everything that they're touting, is it true?
Yeah, there's been a lot of talk around that. And what I find interesting is that their head of chip designer actually left Bitmain and he actually went on to create his own manufacturing business. Now, the fact that they've innovated this new chip is definitely questionable, not on its integrity, but on the implications it has for the whole market. If it's more efficient in terms of price, electricity and consumption, it could mean that the break-even point for actually mining is a lot lower. Yeah. Now, that is good for the space because if the break-even point is a lot lower, it basically means that people can mine and still be profitable even when Bitcoin is sub $1,000 or $2,000, for example. And that just increases the likelihood of people actually coming in as miners. And with regards to the factory, I think that was definitely a really interesting point because when companies, especially like Bitmain, where they're actually trying to IPO, etc., and take advantage of mergers and acquisitions, they would cut assets which have a lot of risk and debt tied to them. Factories, as you know, are depreciating assets and they have a lot of debt attached to them. So cutting that out would basically make their balance sheet, i.e. the assets they hold, and the profit they make look a little bit more appealing. So when it comes to valuation time, guess what? Bitmain can suddenly be valued at such a high level. And that was something I definitely found interesting.
Yeah, and it does look good to the Hong Kong Stock Exchange and also the regulators because they are going for the IPO, even though the IPO isn't actually going to go through. And a lot of people have made their comments already on it. And I'm talking about the regulators here.
Yeah.
They just need regulation to become a thing first before they do start taking on board a lot of these IPOs. And not just that, these ETFs that people are really and truly trying to push at the moment. Regulators need to clear up the space. A lot of these cryptocurrencies need to disappear. And once that does happen and once there's clarity, that's when some of these things will actually start getting approved.
Yeah, totally agree. One of the bits of news that I've actually been monitoring is the whole ETF. Now, there's been a lot of confusion in the space and it's actually quite worrying. A lot of retail investors are thinking, oh, the ETF's going to get approved because Fidelity are launching their custodianship and trading platform, when it's basically got a near on zero chance of being approved.
Correct.
It's been delayed. I think 2018 August was the last actual submission and it's been delayed ever since. VanEck and Solidex most notable. And it's actually quite worrying because looking at daily volatility and volumes traded on exchanges, I mean, something like BSV is trading against USDC at sub £30,000 in daily volume. And it's doing the same with USDT at 7 million. Yeah. Bitcoin isn't too dissimilar. And if the volatility isn't there, I mean, if the volume isn't there traded, it basically means that people like you and I who have 30, 40, 50 grand could actually manipulate the market. And that is one of the big reasons why the SEC actually denied the ETF to go through in the first place, because it doesn't safeguard people from manipulation. And with lower volumes being traded, manipulation just becomes easier and easier.
Yeah, and that is something that they touted on every single ETF decision that has been made is market manipulation. We need to get a handle on market manipulation before any of these guys actually launch. And what a lot of these ETFs are doing, like Solidex and VanEck, they're working internally on what they believe that they need to fix, when really and truly it's a overall market issue that's happening here. So with them doing what they're doing, yes, of course, it's a benefit and they're working closer towards that goal. But end of the day, we need to get over the whole market manipulation thing, because if an ETF does get approved, that can actually greatly increase the manipulation that is currently going on in this market right now.
Yeah, of course. So, I mean, we saw it with lead, we saw it with silver, copper, gold, aluminium. Before the ETF was actually approved, it follows the same, charted pattern. There's a peak, then a trough, and it pretty much is stagnant. And once the ETF is approved, then it really just goes parabolic. Now, because a lot of people look at Bitcoin and explore its qualities, like it's a finite resource, etc., it could be classed as a commodity. And a lot of people, a lot of the research papers I read and my thesis, which tried to determine the asset type of Bitcoin, proved that it was the closest to a commodity. Now, that means that in terms of the ETF and the roadmap to being approved, it will follow a similar sort of pattern.
Yeah.
And if you actually trace the Bitcoin chart on top of the gold chart, silver, platinum, all other commodities too, it actually perfectly matches.
Yeah.
And that pretty much shows that Bitcoin does have a lot of space for growth.
Yeah. And the thing is, people do need to be patient at the same time, because work does need to be put in. And with gold, which is tangible, and people at that particular time understood it a lot easier than what they understand cryptocurrency. With that in mind, it took gold 10 years to get approved for an ETF. So in this space, if we're pushing, which we've been pushing for what I would say about 2.5 years for ETFs to actually start getting approved, it's going to take a lot longer than that. And if it does happen in a closer time frame than what it happened with gold, which I do think it will happen in a closer time frame, people need to understand still 2.5 years is not a long time when it comes to these things. And when these regulators are moving, it does take them a long time to do so, because they do have to cross-verify on absolutely everything. That's why it's important for a lot of the companies that are actually currently working in this space now to be constantly working with regulators, bringing up issues and bringing up solutions. And then that's how we get to the end goal.
Yeah, 100%. Finally, the last bit of news we're going to cover is to do with JP Morgan. Now, JP Morgan have currently released their coin. A lot of people dub it to be a cryptocurrency, but it's very different to a crypto.
Completely different.
Yeah.
Completely different.
So the JPM coin is for internal users only. And just to reiterate, it is the first US banked coin, which has the sole aim of improving the payments business. Now, according to the head of the blockchain division at JP Morgan, the coin was basically devised to help them process transactions within JP Morgan to their corporate clients. Currently, they process around $6 trillion dollars worth of transactions per day, and this is basically to ease up the process. I mean, they currently use Swift and other payment systems, and Swift can take in excess of a day, whereas they can have instant settlement with this in place. One thing the head of the blockchain division wanted to highlight is that it's not a cryptocurrency and it is nothing to do with Bitcoin. It's simply just a payment service, if that makes sense. So it's almost like an e-money. And one thing of particular interest is how JP are planning on venturing into the blockchain space and really paving the way for institutional investors to do so.
Yeah, I think the way they structured it, though, is slightly construing the way that people actually see this market, because what they have launched is, end of the day, just a private blockchain.
Yeah.
So a private book. Now, the whole benefit of us actually having access to cryptocurrencies is the whole fact that it's public, the fact that you can see every single transaction that has ever previously happened. Now, when it comes to a financial corporation, you want people to be able to see all the transactions that have ever happened. It's the bank that, of course, wants it privatized. So it makes complete sense that they're now launching this JP coin, which is private, and they're hoping that people just basically attach onto it. So they completely get away from the whole public narrative. Now, the reason why we want those individuals to be public is so that if they are doing dodgy transactions or are laundering money, which a lot of these institutions and a lot of these corporations have been quite simply fined for in the past, then this time round, we can just look at it and say, that's exactly what's happening. Whereas if it's private, you don't have that power.
Yeah, I think it also says quite a lot about the industry. I mean, Goldman Sachs uploaded a video to their YouTube channel earlier all about the future of banking. And within that, they actually included crypto. And they done it in a subtle way, but we noticed it was there. I really do think JP Morgan are trying to target a whole different arena too. The fact that they're entering blockchain, I mean, we already know M&A deals were pretty much peaking in 2018 because of US tax reforms. So there's a lot of cash in the economy just waiting to be deployed. Now, with economic uncertainty in other jurisdictions like Britain, some states in America, it basically is aimed at businesses really honing down on their core assets and improving them so they can actually grow.
Yeah, because to do one of those types of transactions, for example, today, that will take one working day. So if you could cut that time down, no matter how much you do cut it down, whether it is 50% reduction or whether it was even a 10% reduction, when it is a reduction, it's a benefit. And especially if the platform costs a lot less to operate than what the traditional markets do. So it does make sense for them to make these movements and create these particular products, but it is them also trying to shy away from the public limelight of all these backdoor transactions that are currently happening and how the real money is currently moving around as well. And that will expose a lot of it.
On that note, guys, we will now wrap up this week's episode of CryptoTime. You can find us on the usual YouTube, iTunes, Spotify, podcasts, and the actual live video recorded version if you prefer that. So hit the notifications, like, subscribe, and leave any comments you have down below.
And of course, don't forget, do not take any of this as any form of financial advice. It's just the opinions of myself and Stephen from the research that we have put in. So we'll take that opportunity to say peace and love.